We're at Proof of Talk 2026. You're the CEO of BitMEX,
Yes.
Mr. Stephan Lutz. I'm very honored that you took the time to talk to me.
Thanks for having me.
Thank you very much. BitMEX was originally built for a very specific type of trader, like traders that are very aggressive, crypto native, comfortable with higher risk.
Yes and no, I would say.
Okay.
There is truth to it that this, if you looked at BitMEX in the beginning and even now, that is our, let's call it core user base, right? The connotation, from my point of view, is a little bit misleading, right? So I would agree with aggressiveness in terms of people that have an idea on where markets are going to move, right? So this, of course, they all like to take risks, right? So meaning they know what they get themselves into, and they are totally comfortable with being accountable and responsible for this, right? So not putting it on others. In this way, yes, but this is the differentiation. If you look at this between a trader and an investor, right? An investor is like my kids, my mom, saving
Yes,
every month,
exactly.
accumulating some wealth,
That's
right?
where my question actually would go, is that when we look at the frame of this event, which is
Yes.
very much targeted towards institutional investment, which is not the core user base of BitMEX
Oh, it
at
is.
this time, is it?
It is. If you look at our, and we reflect the development of the crypto markets as such. I don't want to go too much into detail, but just quickly, right? If you look at the beginning of the crypto markets, it was a 100% retail business. Not because this needs to be the nature of the business, but there were no companies being involved. It was pure peer-to-peer thing, right? And then you had the evolution of the market, you had proprietary trading firms coming on top of it, then you had market makers evolving, then you had high-frequency traders. Like in the last cycle, we had the rise of some asset managers that managed other people's money. And with this, you saw the share of, we call it institutional trading on BitMEX growing as well. If you look at BitMEX at the volumes, like 80%, 70 fluctuates, 70 to 80% are institutional, and 20 to 30% are regulatory-wise retail, so they are individuals. But even they are not individuals like my friends. They're like at least semi-professional traders usually, people who trade actively, maybe not every day. When we monitor daily active traders, we have more than this, but they do at least do regular trades, right? So it's not if you go to Bitpanda, for example, here in Europe, it's more or less like your savings account or your bank account, and you might buy some Bitcoin or you might buy some Ethereum, and then you leave it there for long, right? This is not what happens on BitMEX. On BitMEX, it's more like a Eurex or a Chicago Mercantile Exchange. I mean, BitMEX stands for Bitcoin Mercantile Exchange.
Yes.
It's really like for the ones who trade actively. So traders versus investors is the key word here.
Okay. So if we're talking about derivatives exchange, for example, so when a large institution wants to trade derivatives, they would typically go to places like the CME because it's regulated, it's government overseen, it's well understood what rules are in terms of clearing and also counterparty risk.
Yes.
Now, BitMEX is not exactly that because it's not regulated in the same sense. So when you would talk to a risk manager at a pension fund or a bank, wherever, what would be your argument for choosing BitMEX instead of going to the CME?
Actually, I am from that space. Before I worked at BitMEX, I mean, it's not totally correct, right? But like you could say like 10 years in banking, capital markets and corporate finance. Not exactly 10 years at Deutsche Börse, so Europe's largest stock exchange operator, including the Eurex brand, and 10 years PwC as a senior partner and leading their capital markets, department in continental Europe. So I know exactly what I speak about. The thing is, BitMEX is, and this is what drew me to BitMEX actually, BitMEX is way better. And let me explain this. Everything you said is true. But usually the institutions do not trade on the CME or on Eurex or in Live in London because it's regulated. The regulation and the license is it's not the cause, it's the effect. right? And yes, the legal and compliance department, they have the rubber stamping because they're, I did not need to take care of this. So there is a benefit, and I totally, let's say, acknowledge this. But if you look at counterparty credit risk, clearing houses in the TradFi space have, for good reasons, massive so-called lines of defense. You have a clearing fund that the traders need to contribute into, and they make up of billions of euros or US dollars. You have usually a requirement to participate in auctions if someone is it's not called liquidated, but if someone is going into insolvency, right? So to even out the market, and you have recourse. So, which is the biggest thing actually. That means you have margin calls, right? So if someone trades on CME or Eurex and you accumulate losses, you only get margin calls, collateral calls, periodically. So that means something can happen overnight and you get a call and hey, basically saying, hey, you still owe me a couple of million. And this is really like going into the billions. And this is why you need to be regulated. This is why not everyone can be a member of CME or Eurex because you have minimum capital requirements. Long story, hard to believe for everyone out of TradFi. Our founders have solved those issues. It's not necessary. We run a so-called socialized loss mechanism, which means with every trade, we accumulate something that's called the insurance fund. That actually is the line of defense, right? And for the longest period of crypto, we have had the biggest insurance fund in the whole industry. Like really, it was up to speed or up to the size of the lines of defense, for example, of the Eurex. And then it's going to be automatic. Number two, if you trade on it, your position is more or less guaranteed by the insurance fund. And if you go to a zero collateral balance, you are liquidated. That's where all this, people have got liquidated. It just means they didn't have enough money to still be on the platform. And instead of letting the losses accumulate and then call them up with recourse and say, hey, you actually owe us money and we don't know whether we get the money, the founders decided to operate a model where you say, if you don't have enough money, your position is force closed to protect the other side of the trade. So if you look at the efficiency and if you look at counterparty credit risk, the crypto exchanges that run this model as a pure play, which BitMEX is one of a few only, your counterparty credit risk situation is way better than on the bigger exchanges. You get in real time what your position is. You don't need to wait for margin calls, you see it online. Downside, frankly, for some of the players is they need to be able to monitor their position in real time. And if you operate a 24/7 market, that's for some a little bit more challenging.
That is a challenge for sure.
Sorry, that was very long, but that's
it's a very good answer. It's very, thank you very much. At the start of this year, BitMEX launched a new product that lets people trade contracts linked to US stock using Bitcoin as a collateral for these trades. So it's round-the-clock trading again. Now that feels different from how BitMEX started. It's a different business product. So who does this target? For whom is that?
That's a very good question. And that's something that the industry is speaking a lot about and on this event as well. It is, let's say, easily explained. It just says we bring something to we call it crypto native crowd that they couldn't access before. This whole thing, and we did more. We did equities, we did commodities. I think just last week or the week before last, we launched FX perpetual swaps, which are classical financial instruments. Until last year, if you were in the crypto ecosystem, so meaning like you have a self-custodial wallet, for example, or you have a crypto exchange account, and you don't have in parallel to this your TradFi brokerage account, you were not able to actually get exposure to classical financial assets. That changed when the demand for this increased, which was like after October last year, where basically crypto markets, they didn't melt down. That's the funny thing, they didn't melt down, but you had a crash. And now everyone was cautious and saying, hey, maybe we try something classic. Plus the trend to tokenize equity. So our product is a little bit different. It's not a tokenized equity. It is a perpetual swap on an equity. It's the same as a future on CME or Eurex on a particular stock. It's basically the same logic.
Okay.
So, and we brought this to people who are digital native and crypto native. They couldn't access it in the classical world. So what we see in the industry right now is blurring lines in terms of coverage of products. You see banks giving crypto exposure to their clients in their usual accounts. It's starting very mildly, but it takes off.
Yes.
The same is true for the ETF. It's the same thing. It's like, I want to own Bitcoin, but I don't want to have an own wallet. I don't want to go to a crypto exchange. I want to do it in my, I don't know, SocGen account or a Deutsche Bank account or what have you. Well, buy a BlackRock ETF, right? So I wouldn't recommend for costs, but you can do it.
You can do it, but
Exactly.
that's the access point for a lot of
Exactly.
non-financial literate people to get into the space, I would say.
What we do is the exact opposite, saying the crypto native guys, the digital native guys, they would love to have those equities, bonds, commodities, but they were not able to access this, and we bring the access to them. That's basically it.
For years, BitMEX has been off limits to American traders, and you still are.
Yes.
But the legal cloud has now cleared.
Yes.
The regulatory environment in Washington is more favorable to crypto than it has been in a very long time. So is getting back into the US market a priority? Will we see BitMEX back in the US soon?
Well, nothing we can say for sure. What we can say and what is true is we have been, since we have the clearance, and then now with, it's not the acts itself, but like with the Genius and Clarity Act and everything that happens, we are closely looking at going back to the US, which would be not now, probably in 2027, right? You still need to play the game. You need to apply for the relevant licenses. You need to make sure that you have an offering on the ground. It's not like you cannot do that offshore, and you shouldn't do it, actually. So there is still work to be done, but we are looking closely at that, and we hope to move next year. Yes.
We're talking about clarity and getting back into the US. What's your view if clarity doesn't pass? Does it make sense for you to go back? Do you see a chance that it doesn't pass?
No. Actually, the Clarity Act itself is not so relevant for a business like ours, like BitMEX.
Okay.
It's a little bit the same as in Europe, where everyone. Sorry to extend that. In Europe, everyone.
Interesting discussion.
In Europe, everyone speaks about MiCA or MiCA or whatever you pronounce it. The MiCA is just in quotation marks for two things: spot exchanges, where you really buy like coins, and to a certain extent for stable coins. We are derivatives. So when we go to Europe, we speak about a MiFID license, which is like pretty old, because a MiFID is taking care of derivatives. In the US, it's a little bit the same. So Genius actually was the real thing. So opening up and say, hey, now let's say crypto or the technology, it's about technology. It's here for real, and we are going to adapt it. Clarity is basically a stablecoin regulation. It delineates where does banking stop and where is digital assets starting, which is important for the whole industry, and it's more a signal so that is there unity in what they actually want to achieve and how they want to develop markets. But for a platform like ours, we look at so-called DCM licenses. So it's like direct clearing member licenses or capital markets licenses. They all exist already. So the Genius was something just to kick it off.
Yes.
Clarity is more a signal on how fast the US is going to go forward. But it's not like that we would apply for something under Clarity Act. We would basically apply for something that's already there in the regulatory framework.
Yeah, but it's just that the whole environment is more...
It's a sentiment, yes.
It's a sentiment, but also the attitude within the... like if we're talking about the SEC or the CFTC, it's a very different approach to how they're dealing with the industry as a whole, which was very visible over the last 18 months. So,
absolutely.
BitMEX has introduced AI tools that analyze how its traders are behaving, and then is also feeding this data back to the traders themselves, so that they see what they did right and what they did wrong in the end of the day. But at the same time, there are also other large institutions that have entire teams and systems doing this kind of analysis as well. But in the end of the day, who is really using this data, and what do you see in changes in how traders apply the information that they receive back?
I think, or we think, that we have something quite special. That's very different to what you get, let's say, if you are covered by a bank, even if you are covered by private bankers. What you get at a bank usually is extensive research, right? So they give you information about what went on in the markets, what's with interest rate movements, what is the inflation expectation, what's GDP growth expectation, etc., etc. This is not what we speak about, right? So this actually you get at a bank. In crypto, you basically do your own research. It's the do your own research, DYOR, right?
Yeah.
It's more like this. What we concentrated on is really giving our heaviest traders, so the most active ones, but individual ones. It's not for institutions. It's like for individual traders who trade a lot, a tool to allow them to reflect upon their own behavior. It's really about personal behavior. So what does it do? To give you an example, it looks at your trades, and it only works if you are a regular trader. If you just have 1 or 2 trades a month, it doesn't work. But if you're a regular trader, it compares like, this was the trend, this was price action, and you bought here, you sold here, you bought here, you sold here. Here you put in a strategy, here a different strategy, and comparing that to what the optimal solution would have been. It's not about predicting the future. It's like looking back and say, hey, a trader goes, for example, is always like too soon to trade or too late. Right? You always like price going like this, and here they buy, and then it's going like this. So it's about sentiment and how you behave. Or like, hey, you have put in a lot of limit orders, but then you canceled them because you were swept away by the sentiment of the market. So are you disciplined enough? Not disciplined enough, right? It compares like, do you use limit orders or do you use market orders?
So basically the target is to take out the emotion from the trade.
Exactly, or at least make the emotion visible. So that the trader then has an ability to say, hey, it works for me or it doesn't work for me, right? So it's like the slogan behind it is a little bit like become a better trader. And this has the research aspect, like do I know enough about the market? And then it's like, how do I behave in stressful situations? And this is what the AI tools are for.
Sounds cool.
I have to say, it's, I mean, not shocking, but when you get it, I tested it myself, and like,
I was just about to ask. Did you experiment yourself?
Of course. I mean, when the team came up with that idea, I'm like, okay, give me a report for my own trading behavior. I mean, I'm not like sitting in front of the screen trading 8 hours a day. I have a day job to do at BitMEX, but I trade regularly as well. So I'm like, give it to me, right? And it told me something about me, and I'm like, damn, I didn't want to hear, but it's damn right. Yeah. Right? So, which is where it adds value. Yeah.
Good. BitMEX invented the perpetual swap, which is nowadays widely used actually across the industry. And what happens on a platform like BitMEX can actually shift prices across the entire crypto market.
Okay, yes, go on.
Let's assume.
Tell me more.
So, that's a significant amount of influence. Let's say there is a big influence. So as a larger, more traditional players enter the space and they expect a certain level of stability, how do you think about an exchange's responsibility for what happens in the market more broadly? I'm not saying it only for Bitcoin, but the exchanges do have an influence on what is happening. So.
Oh yes. I think that's again more if you go to substance, not to form, right, or to stories or lore. This is what BitMEX, way before my time, was always about. I think the delineation is whether you think you should be responsible for the result or for the framework. We believe very much we are responsible for the framework. What does it mean? BitMEX has been the first, it's really true, the first crypto exchange that had a 100% verified user base. We started in 2019 with our KYC program. It was more or less finished in 2020. So after 2020, you could only trade on BitMEX if you were fully KYC, which means like proof of identity, proof of residence, liveliness check, source of funds. Hardly known. And if you look back at what you can read about regulatory actions, you're like, this doesn't go together with what I just heard.
Yeah.
Still, it's true. They were basically indicted once they had solved the problem already. And there wasn't even a regulation in 2019 about that. There was no requirement and nowhere in the world about it. But they were like, the founders were, it is coming, number one. Number two, we want to make sure that we know who's on the platform so that we can make sure we can, I mean, it's not about switching off, right? But we can manage the accounts and the behavior on the platform. That was followed then later on, I was on board already, like by implementing market surveillance. So we survey the behavior of people on the platform, meaning like, not like, are you successful or not? That's not for us to say.
Yes.
But do we see patterns that call for action? Right? Is there market manipulation? Do we have wash trading, right, to show bigger volumes? And we usually start acting against that very early. You can see this even in the volumes of BitMEX. We have been the biggest one in the space, and now we are one of many, because we wanted to have a platform that acts with integrity.
Yes.
So still, you can be liquidated, you can incur losses, where we say that's none of our business, frankly. We want to make sure that you have all the transparency you need. So if you are on our platform and you monitor your position, you get in real time the health of your position, what's your, let's say, distance to liquidation. We show you the P&L, we show you how much collateral you have left actually to deploy. So you have all that in real time. There is no time lag, nothing you get at the end of the day or so, it's in real time. So we believe we do everything that's possible to have that. The second one is, even if you look at the volumes and you might say, hey, that might move the markets, we strongly object this. Why? It's a little bit more nuanced. If you enter into a perpetual swap, let's say Bitcoin, you go long Bitcoin at 70,000. That doesn't move the Bitcoin price because the Bitcoin price is made at a spot exchange. And we mark our positions not to our own spot price, but to at least, I mean, for the liquid coins, to at least 3 other venues. We have no self-referential loop. So you cannot manipulate prices on BitMEX by trading on BitMEX.
Okay.
You could. I mean, if you're really malicious and you have a lot of funds, you can go to 3 other venues, manipulate prices there, and then it will of course have an effect on BitMEX. But this is like hardly anyone in the space has the firepower to do that. And then if they would do this, it would be visible immediately, and then they will be shut down anyway. So we believe we are not like, it's not that there is no opportunity, but we try to cut that away as much as possible. Where you have this and you have an impact on the market is on the so-called, sorry, that's very technical, and I hope someone is interested in this. You can have an impact on funding rates, which is like, if people go long, others need to go short. And usually the market is like, everyone believes it's going up, everyone wants to go long, or it's going down, everyone wants to go short. And to counter that, you basically have an incentive that's called the funding rate to enter into the opposing position. There, interestingly, yes, on the illiquid contracts, we sometimes see awkward behavior, but we usually then lock accounts, follow up, make sure everything is in good order. If it's in good order, we resume trading. If it's not in good order, we take action, right? So, yeah.
So it's trust and integrity that informs your decisions in how you...
Yes, the main goal of it, I mean, for us, the main goal of a derivatives exchange, and this is why the founders founded that venture, was to have a, I don't like the word, but like it's called fair market price. It's not fair, it's like an adequate market price that reflects supply and demand in an adequate way. And this is what drives us, regardless of what we do, whether we do it for retailers, whether we do it for institutionals, that's the main point. So the funny thing is, if I'm in one room with regulators, for example, I usually say I agree with everything they say in terms of espoused goals. They want to have platforms that act with integrity. They want to know who's trading. They want to make sure that and we run sanctions controls, like we run US sanctions, EU sanctions, UK sanctions, right, by 100%. They want this. They don't want to have terrorist financing. They don't want to have illicit, and we all agree to this. Where we disagree sometimes still, and the industry as a whole, is the means how you achieve it, right? So we are 100% in line or online with the perceived goals of regulation. We only sometimes, let's say, we don't scream and we don't shout, but we're like, if it's then do it as the TradFi banks do. I come from that space. I'm like, it's not fit for purpose. You can do it way more efficiently. Yeah. Sorry.
No, it's interesting because especially when it comes to I've been talking since yesterday and also today, the word efficiency appears again and again in many different contexts in the conversation. So you talked already about your background. Before joining BitMEX, you spent years advising major banks and financial institutions at PwC. Now you're running one of the oldest crypto exchanges through what feels like a turning point for the whole industry, actually.
Yes.
Are we genuinely at the moment where digital asset trading becomes a normal part of how global finance works?
This is the very, so what do you say in English? That's the excitement about it, right? We are in an inflection point where we had that earlier, where it feels like finally digital assets, crypto, you can call it whatever you want, and the traditional rails are like blurring. For me, that was always what it was about. So actually having advised all of those banks and having been in the exchange space and having been in banking was what sparked my interest in blockchain technology. I come more from the blockchain angle. So way back, it's so old, and I'm so old, I think it was 2010 first time I got it with blockchain technology. So I still worked for, no, that was even earlier than this. No, that was earlier than this. But I still worked for Deutsche Börse. And then Bitcoin started in 2008, and then there was blockchain technology, and I was like, what is this? And Deutsche Börse at that time, one has to say they were very early in analyzing the technology. They're like, this could be something to settle our capital markets business. So we went into this, we analyzed, not me alone, that was a big team, and I'm not a tech guy, right? I'm more from the business and commercial side. We looked at that deeply, really deeply. And at that time that's an interesting thing, but it's an answer to a question no one has posed. It sounds arrogant, but it was true. Why? At that time, if you looked at classical exchange systems, they were executing millions of transactions per second. The blockchain was transacting maybe at the height like 80 per second, and you're like, that's not fit for purpose. Even if the immutability, the permissionlessness and the validation is like great, we can't migrate. Second time I touched the space and then it clicked was when I was at PwC. I did a lot of work about bank recovery and bank restructuring after the financial crisis, and getting all the data on financial positions. And then I moved even internationally. I advised quite some central banks in Southeast Asia on financial stability matters. And then it may click, because it was, if you resolve a bank or resolve the bank in, like back then, you needed usually between 3 months and half a year just to figure out who owns what. Mm-hmm. That's not a bad thing as such, but it takes a long time. So blockchain technology, if you have everything on one ledger, you're like, it's a second, right?
You match it.
And you know who has what exposure. So that would be great if we can have something like this. Then in Southeast Asia, half of the population, sometimes in the countries, do not have bank accounts, but they all had already like mobile phones. And then I got into this, like, okay, it was Ripple at that time, and I'm like, hey, it's about remittances, payments, connection, even the DAO idea, the distributed autonomous organization. I'm still fascinated by the idea, although no one has really cracked the nut here. I'm like, that's really a thing. It's a use case, not for a Western European, but for them, it's a real use case.
Yes.
And that got me into the space again. And from almost like 2016 onwards, I really was active in the space, but personally only.
Yeah, but this is also what adoption reports are
Exactly.
showing, that especially Southeast Asia and
Yes.
also Africa as a continent,
Yes.
they are much faster in adopting the technology because they have a much bigger pressure
Exactly.
to solve that.
Exactly. So coming back to your question, this is why I believe we will have this point where it doesn't blur, but where you will have both sides of the coin. One very crypto native, where you bridge from TradFi to crypto, and then one TradFi where you bridge from crypto to TradFi. And it's not an either or. I mean, in the beginning of the Bitcoiners, it was like they wanted to disrupt the financial system and they wanted to take over the whole international financial system. I have to admit, like, sorry for the Bitcoin maximalists, that won't happen. At least not in the foreseeable future.
So,
but
fiat currency is not going to go away.
Exactly. But you now have an alternative, and alternatives usually, you see that especially in Europe, are good. It makes life harder, but it makes life more stable. And a good level of competition actually improves the experience for the end users. So I believe that's a good thing to have right now.
But is there already enough to be done for the end consumer to actually appreciate all the work that is being put into the development?
Yes, but it very much depends on what you look at. If you have your usual bank account, you're like, why? If you are a younger generation, for example, they do a lot of stuff on Revolut, on Robinhood,
yes.
and they have adopted blockchain technology already in the background. So if you speak to them, they're like, hey, I can transfer my foreign exchange, so my currency, I can pay everywhere. It's way cheaper than with your classical bank. So they see it already. And what is often forgotten, I think the level of crypto adoption in terms of ownership in Europe is already very big. You have more people owning digital assets than you have people having a securities account. Often forgotten. So you have the proliferation and the adoption for what it's worth already. Right? In Europe, if you're in the Eurozone, you don't need stable coins to make payments. You have instant payments via the SEPA network. Yes. It works. It's okay, right?
But when I see this from my own perspective, like it's been maybe 10 years that the mainstream got exposed to anything that's like, to those neobanks, like trading ETFs and all this.
Yes.
But this came very much in parallel, actually, also with developments in crypto.
Yes.
So I think that those two things pushed each other
Absolutely.
much more into the mainstream, which is why we see that younger people are actually adopting it much faster than probably our parents did.
Yes, definitely.
It's a good development in financial literacy as well.
Absolutely.
Thank you so much for your time. It was a pleasure.
Thanks for having me.
To you. It was an interesting conversation, and I hope we will meet again on
hopefully,
next year's talk.
Well, or somewhere else, of course. Thanks a lot.